Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, I will be explaining to you one interesting pattern which is not that commonly occurring. It forms once in a while. This is not a common pattern, but there is a pattern which is more observed in the stock market. In equities it is more observed because there is, you can see, a gap up and gap down openings in the markets like forex, where the markets work 24 hours. We don't really see many gap ups and gap downs, so as a result of that it becomes even much more rarer in the forex segment. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. Here there is the USD CAD chart. Let's change it to the commonly traded instrument, which is Euro. Okay, and to add this indicator, all you have to do is look for it in this option of adding indicators. You can opt for quick search, or you can even go through the list. If you want to know where it is listed, you have to opt for this add indicator option, or else you can simply do a quick search, type in separating lines. I think I got this spelling wrong. Yeah, here it is. Now let us see when it had formed last time around. Okay, so there is one instance here, then we have another instance here. Okay, we are getting some instances. Interesting development. Now here are two candlestick formation, which requires the two candles to be of opposite nature. If we have seen the price decline in the prior candle, then in the very next candle there should be rise, and if we have seen rise in the first candle, then in the very next candle there should be decline. So this is like separation, price separation. And in addition to this requirement, there is one interesting condition that the today's opening price should be closer to the last candle period's opening price. So when I said today, that will require the candle period to be daily, and if you are dealing on the hourly time frame, then in the current hour's opening price should be equal to the prior hour's opening price. And as I said, we need the opposite developments to have happened in these two candles. So if there was price rise in the first candle, here we have decline in this candle. Now if we look at this formation here, we don't really have much difference between the opening and the closing price for this particular hour, and then in the very next candle there is this significant decline, and that is leading to the formation of these separating lines. Now if we use the equity segment, there we can have the cases like there is sharp decline in the first candle, and then there is gap up open in the very next candle, and equal or more rise in the subsequent candle. But that kind of formation is not likely to occur much in the forex segment, as I gave you the reason in my introductory remarks. So in situations like this, when there is not much of a difference between the opening and the closing price, but the price direction is opposite of the subsequent candle, the platform is likely to recognize this formation as the separating line. This is a formation which you can utilize as a continuation, or even if you observe this kind of situation where it is occurring after the substantial decline has already taken place, you can also utilize it as a reversal pattern. But more often than not, it is used as a continuation formation. as we saw in this case. Let us try some stocks. There I think we are likely to get much better combinations. Let's go to CFD stocks. Let's try this Anglo-American PLC. Okay, this is the hourly formation, and some of these instances, examples are here, but I'm not really getting the kind of formation I want to explain to you how this formation is actually should be. These are not really ideal instances, but we are likely to see these not really ideal situations developing in the market much more than the ideal situation, because the non-linear nature of the market, we can't really always get what we want. So let us work with what we have. So let's take one example. This can be a bullish reversal or a bearish reversal. In both these cases, let's take these two examples here. In the first candle, we have the price decline, though you can't really say it is price decline as there is not much of a difference between the opening and the closing price. Just slight lower closing price compared to the opening price. Then the price opens closer to the opening price of the prior candle and goes on to rise significantly. This is a continuation formation. In this case also we see the first candle there is slight increase in the closing price compared to the opening price, and then in the very next candle we have this decline after starting closer to the opening price of the first day. So this is also a continuation formation. Now, for optimizing your trade entries, you will always have to keep in mind what is the stop loss and what kind of target price you can go with this formation. Since there is a continuation formation, there is a possibility of a substantial price decline or a rise would have already taken place, and then you will be making the entry. So that will limit the possibility of substantial gains going ahead, and we will have to optimize the trades accordingly. Now if we take this example here, you would have most probably ended the trade on a losing side. In this case it would have gone on to make some money, but pardon me, even if we were to take simple case of keeping the stop loss just slightly below this opening price, the risk reward ratio wouldn't have been that great. So this kind of constraints will need to be kept in mind, and you should go for the trades where the risk reward ratio is quite good enough, while keeping in mind that the trade can also end up in loss, so you shouldn't be losing too much of money. So we are seeing these cases where there is continuation for next couple of candles and then eventually the decline happens. So in this kind of scenarios, the risk reward ratio is going to be very important. Okay, so now let us see what we can do in terms of the editing. Since there is a two candle formation, I don't really think we can do anything with the input, so this option has been disabled. It is going to pick up the input as it unfolds on the chart. There is nothing you can do. In terms of the output, you can always customize it. You can go for the different color combinations of your choice. So if you feel like, you can even go for this bright green color. Styling can also be changed as per your taste. If you want this bracketing, it will be, or if you want the candle to be shaded in the color of your choice, it will look like this. Now if it is looking too prominent on the chart, you can go for higher transparency. Let's try out 70%. Now you are seeing much increased transparency, lower opaqueness, and as a result of that, this is looking much less prominent but quite good in terms of the coloring. Advanced editing options, recalculate on new candle only. There is this option, but we can't really do anything with the input parameters as I said earlier. So this is not much relevant. Highlight the time period zone. This is a two candle formation. So you can go for this also. Calculate from custom data. This has been disabled. Show indicator on all the periods. So here, if you enable this option, whenever you change the chart's candle period, this formation will be recognized as and when it takes shape on the chart. But if you have multiple indicators added on the different time frames and you only want the pattern to be recognized on certain time frames but not on the other, then in that scenario you will see that if you disable the option only on chosen time frames, you will have these pattern recognized. It's taking too much time. Let us revert back to hourly. So this is how this option works. So that's all from my side for today's session. If you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. Before I sign off for the day, I would also like to explain to you one interesting feature which has been added on the platform, the option of hotlist. And in this option, you get the active stocks shortlisted in this list. You can enable this using this view option. Go to this and here you will have this. So whichever stock is buzzing, which is showing substantial increase or decline, it will show up on this list. Price change, percentage high, low range. So volatile stocks will be added. If I opt for today, here you will see the today's gainers and losers will be included in this list. If I go for hourly, only the shares which have gained or lost substantially in the last hour are showing up on this list. So you get all these options of shortlisting the stocks. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out the newly released trading platform, the link has been included in the bio. So give it a try and let me know how it works out for you. So thank you all for joining in. Today it's a Friday. I'll be back on Monday with a new formation to explain to you how we can utilize different formations to look for the opportunities to trade in the market. So thank you all for joining in. See you next time around. Till then, goodbye.